Hi everybody, it's FIBO Group and you're watching to the Market Watch review. Equities were generally higher in Asia Pacific, but Chinese and Hong Kong markets eased. South Korea and India were also closed for national holidays. The Stoxx 600 in Europe is moving for the fourth consecutive session. However, US futures are reducing the pre-weekend rally. The dollar fell sharply due to the lower than expected US CPI, causing some technical damage to the charts. The $1,800 level was tested by gold, but it has been sold to the stronger dollar. It is now a 5-day low of $1,778. September WTI fell 2.4% on the weekend, but is now down 3.6%. Asian Pacific market. Japan's economy expanded by 2.2% in the second quarter at an annualized rate. Although this was disappointing, it was actually a revision to the first Q1 quarter, which saw a 0.5% decrease in output and a 0.1% increase. Japan's industrial growth was 9.2% in June, compared to 8.9% in the preliminary estimate. This follows a 2-month slide, minus 7.5% May, minus 1.5% April. It appeared to reflect the delayed effects of China's lockdowns. The US dollar is little changed against the Japanese yen and is trading within the pre-weekend range. JPY 132.90 to JPY 133.90. The Australian dollar was affected by weak Chinese data and has fallen to $0.7045 in the European morning. Market of Europe. Germany announced that it has 75% gas storage capacity, 2 weeks ahead plan. Next targets are 85% by October 1 and 95% by November 1. France's nuclear reactors are operating at 48% capacity, a drop from 50% the weekend. A few reactors were closed for scheduled maintenance on Saturday. After the US CPI readings that were lower than expected, the euro stagnated at $1.0370. Sterling reached a peak last week at $1.2275. It then eased over the 2 previous sessions before falling to $1.2050 today. Market of America. According to the Congressional Budget Office, the Inflation Reduction Act will reduce the deficit but have negligible effects on inflation. The last set of data points showed a consistent lower than expected reading, starting with the ISM gauge for prices paid for services and moving on to the CPI, PPI, and import-export prices. The Canadian dollar is under threat. After finishing last week at CAD 1.2780, the US dollar has risen to CAD 1.2900 in Europe. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.